Okay, folks, welcome back. This is the ICT Mentorship Daily Log Entry for Monday, March 8th, 2021. Now we're going to be swinging into the 15-minute time frames for the month of March. We're getting ready to roll into month 2 content, so we have to start working with a little bit higher time frame than a 5-minute chart. But just so you know, we will be introducing the 5-minute chart next week in addition to the 15-minute time frame. So these daily log entries will be short, sweet, and you will have PDF files starting next week. I just don't want them yet because I have to do a couple more things with the user groups before I start making them available. All right, so dollar index, euro dollar, and GBP. And we're going to have homework at the end. All right, here is your 15-minute time frame on the dollar index, and let me just introduce you to the new way of watermarking. If you notice, there's a big old series of numbers across the entire chart. That chart that is being shown here should not be in any way cluttered up at all. You should be able to see the candles clearly, cleanly, okay? All of my annotations are going to be in this color, and the reason why is I found that there were some individuals laying filters over top of my videos and redubbing them. So now if any filter lays over top of this, it just drowns out all of the commentary. So also, these tracking numbers are directly related to your user group. So your user group is broken up into 1,000 people each. Now I don't need to know who you are right now, but I just need to know what user group you're in. And once I know this number, and they don't need to send me a video anymore, all they gotta do is tell me this number, and then I know what group you're in. If you're leaking or if you're selling, I need just this number. It also appears in the price axis, and it's in the time axis as well. I'm going to show the annotations now. All right, so you can see right away, everything is exactly what it was in the previous slide, but now the annotations are here. And yes, you can still read them. Do not send me an email complaining because I will ask you to not continue. Friday's high here. We have buy side liquidity resting above that. Sunday's opening. I wanted to see an opening that was higher. So in other words, I wanted to see a gap higher opening, come back down, fill it, and then rally. Look what we have here. This is where the close was on Friday. Now, if you look on TradingView, sometimes they put this little tick here showing you like that's the Friday close. I think it's what they're representing. I don't ever look at that tick. Okay, I don't want to look at that. I want to look at the last closing candle price. Okay, so this is an up close candle. The close is right there. I annotated that. The opening price on the week is this candle right here. So I extended that out in time. This is your weekly opening gap. All right. We're bullish, or we were bullish on dollar. The gap down trades into the order block here, rallies above the gap. See that? Rallies above it, and then does exactly what I said I would like to see if we had a higher gap opening. Trade back down into it. Well, we have it here. We gap down, we trade up through it, and now back down into it. It's going to act as what? Just like a fair value gap would. Institutional order flow entry drill, support idea, and it rallies. What should it rally for first? Friday's high. Buy side liquidity rests above that. 10 pips above, 20 pips above. Extend it out in time. We also have November 23rd, 2020 bearish order block. You can go out to your higher time frame and see what that is. And the market rallies up into that, 20 pips above Friday's high. Kill zones. London trades in a small little retracement in here and it rallies. Finds some support at bullish order block. Rallies again. Back down into New York Open. Okay, New York Open has a discount relative to the London low and the high prior to New York session. Trades down. Optimal trade entry. Buy side imbalance, sell side inefficiency. Consequent encroachment. Bullish order block. OTE rallies. What should it rally for? Buy side liquidity above here and maybe get a 20 pip sweep above. Think about what I've taught you on the higher time frame what I've been telling you on the weekly and weekend commentaries. I'm giving you the bias on those days, what we're focusing on. Well, we've been wanting to see higher prices on dollar, and you can see that we did in fact have daily institutional order flow that's been bullish. So while we're in these lower time frames, trying not to lose sight of what the higher time frame chart was drawing price up to, in this case up to. If you go back into your notes also and think of what I taught you with the big figures, notice the weekly gap. Keep going over here. What's it close to? 92 big figure. So 92 big figure, if we trade up through it, and we're expecting to trade up through it, how many pips can it trade through a big figure? If you're bullish and if it's trading up through a big figure, what does your note say? 10, 20, 30, and as much as 40 pips. Here's the big figure. Here's 20 pips, 40 pips, and trades up into that. So you have several things converging. Bearish order block on the daily, 20 pips above Friday's high, 40 pips above the big figure inside bullish order flow. See that? So if you're looking for an optimal trade entry in here, trading with institutional order flow on a higher time frame, New York session continuation of what London has done, here you go. Rally. First partial above here, and leave a little piece on to see if you can catch 20 pips above, and maybe that higher time frame order block. That is in itself a complete model. If you look for trades like that, you won't get one every day, but you'll get one probably every week. Who's going to complain about that? This is an easy bread and butter setup. And if you can find 20 to 30 pips every single week consistently, net, you can build wealth. Eurodollar. Here's your blank chart. Let me get my little cursor thing out of the way. So you want to set your chart up like this. And every day, I promise you, the videos will be shorter. It'll be just me showing you the blank chart and then going to the one with the annotations and talking briefly about it, okay? But once you have your chart set up and you dressed it the way you feel is important for your level of understanding, unpause the video because I'm getting ready to show it to you now. All right, here's the Eurodollar annotations, real short and sweet. Friday's low, sell side liquidity, fair value gap in here, trades up into that as well. This is your tiny little Judas swing ahead of the London session after midnight New York time. Sells off, comes back into Friday's low, distribution, attacking the sell side liquidity below here, consolidates ahead of New York. Creates a buy side liquidity pool. All this move here in a shallow little retracement and then drops one more time. There's a liquidity pool in here that I didn't annotate because I forgot. I apologize. The sell side liquidity is attacked there, and then it retraces up into the London close kill zone right here. So it's trading into a bearish order block and optimal trade entry from high to low, retracement in. Now, what's the higher time frame on the daily chart? Bearish institutional order flow. So we can use the London close time frame to get in sync with the higher time frame. Sell off, yes, down into London close. Attacking again a more aggressive run below that sell side liquidity pool there. All right, so we have the British pound. It's a 15-minute time frame. This will be real short and sweet. If you're not ready, pause your video. Okay, I'm going to show you the annotations now. So naturally, you can see we have had a consolidation period from Sunday's opening. Didn't do a whole lot on Friday. We traded up into this fair value gap here. All I did was extend that in time. Okay, and it bounced off here on Sunday, and then on Monday's trading at New York midnight, we traded down to the daily fair value gap premium level. This is the daily fair value gap discount level, so you can go out to your daily charts and find those respective levels. London Open, find some support at that fair value gap, rallies up a little bit, and just chops wood, doesn't really do anything, and creates a short-term high in New York Open, and then trades back down into the close of the day relative to noon, okay, because we're using midnight to noon for short-term trading intraday. And nice respect of that fair value gap premium level, but otherwise really just a lethargic day. Didn't do a whole lot. Now we're going to go to your homework. I want you to outline everything that makes this a buy on S&P. Okay, so in TradingView, the symbol you're going to enter into the search window is ESM2021, and that's going to be the June contract for 2021. You're going to pull up a 15-minute time frame. You're going to show about this much data, so the 4th or so to almost 2 o'clock in the afternoon, March 8th, 2021. And you're going to be focusing on this area here. Why is this a buy, and why is this an objective? Now, I'm going to teach a really low level teaching with this very chart here on my Telegram channel tonight. Okay, I do not want you panicking and freaking out that I'm going to teach the same level of mentorship in that Telegram. I'm going to be teaching a lot of what's already in the YouTube channel, but I'm going to keep them engaged so that way I don't get this onslaught of emails begging me to open up the mentorship, which I have no interest in doing. When we meet again Tuesday evening, I will give you all of the mentorship level in here. Okay, but I want to see if you can pull out all the things that I'm not going to talk about in the teaching in the Telegram. Okay, that's your homework. You're going to see, and it's going to settle your nerves, that what you're learning here is far deeper, far more precise than what I'm sharing with the YouTube community. Okay, so with that, again, all you're doing is framing why this was a buy and why did it go there. Okay, why here to there. You're focusing on the buy side. You're focusing on just this fractal, this low to that high. Why was this a buy, and why were these levels considered? Okay, and I'll give you the details tomorrow when we come back, and another level of homework as well. So these are like little studies I'm going to give you each day. If you don't do them, you're not really doing as much as you should be doing while you're here, because I'm giving you like tiny little case studies to go in and see, and you're going to learn by doing this over and over and over again. These things repeat. You'll build perception, and you'll also gain pseudo experience, and this pseudo experience eventually turns into being able to look at the chart, see it real time, and say, this is what it's probably going to do. And then over time, you're going to see that you can read the tape. Reading the tape is reading the market, knowing what it's likely to do next, and that's forecasting. Once you're able to forecast, trading becomes far easier. Right now, what you're scared about is not being able to do what you see me do. And it's a little unnerving because you want to be able to do it so bad, and it's not happening fast enough for you. So to help you understand that it's a graduated understanding, I'm going to give you these homework assignments each day. And do not be discouraged if you don't have everything that I'm going to show you. The fact that you're studying and me revealing it to you, it'll feel great if you have some, if not all. But if you don't have it, or if you don't know how to frame it right now, don't let that discourage you, because the examples each day will build in your understanding. And then you'll start seeing a month, 2 months, 3 months down the road, you're going to say, oh yeah, this is what I think is there. And then you'll see there's a lot more things that you'll find in your chart before I show you the solution in the next day. Okay, so hopefully you found this insightful. I will talk to you tomorrow evening. Until then, be safe.